Hello and welcome everybody, it's Stephen again and I'm a popular investor on the eToro platform. As usual, if you could please like this video and subscribe to my channel, that would be really appreciated. So, as usual today I'm going to be talking about what happened in our portfolio last week, talking about what happened in the market events, and also giving you a little bit of an insight into my strategy and what I've been doing. So overall, last week the results were pretty flat overall for the indices, but it was a bit of a roller coaster week. So the indices finished about 0.4% up for the S&P 500 and also the Nasdaq, and our portfolio finished quite similar. But it was quite a strange road along the way last week, as we saw a continued decreasing in the bond yields, which really helped to drive sentiment in the early parts of the week, and also helped to drive tech stocks or growth stocks. That was continued throughout the week until Wednesday, when we had the minutes of the Fed meeting, which was very similar to what they'd been saying previously, that inflation was higher than they had initially anticipated, but they considered it to be transitionary. But they hadn't made significant enough progress yet to consider tapering measures for the economy. So this was kind of seen as a good sign, but something that had been expressed many times before over the last couple of months. However, on Thursday, people started to think that maybe also this meant that the economy was starting to slow down in terms of its growth. There was also some concerns in terms of the economic data that came out last week as well. And some of that was to do with the unemployment rate or the jobless rate, which had increased slightly from previous months. A lot of that could be to do with some of the fear to do with the Delta variant. But overall, the economy seems to be growing and recovering well. But there's just a little bit of a worry on the Delta variant. On Friday, after a big dip on Thursday, we saw a recovering of stocks that had taken a beating on Thursday. And although it's not entirely known exactly why this happened and why there was a good rebounding, it is anticipated that a lot of this is because as the earnings season comes up, it's expected that there's going to be very good results for some of the major companies. So I think that the price went up and in anticipation of these really good earning releases. Also, some key segments as well in the US that did well last week was real estate. Real estate did well because as the bond yields fall, this is very good for the interest rate sensitive industries such as real estate. So that was a bright spot. In terms of sectors that did negatively last week, oil and gas performed quite badly last week in the markets. And one of these reasons is, as we've known over the last few months, OPEC have got together and they have agreed oil production cuts. And they've managed to keep these in place for a significant period, which has been good for the oil price overall. However, there has been some inter-arguments between oil and gas companies throughout the world in keeping to these quotas, and there were some fears last week that some of the oil and gas companies may not adhere to these quotas, which could see some pressure on the oil price. I don't think that they're going to be able to do this long term, and I think that they will reach an agreement. So moving on to Europe now, Europe was dominated again last week by the Delta variant of COVID. And most of the indexes around Europe finished fairly flat. So in Europe, again in UK, the cases of the Delta variant continue to increase despite vaccination efforts. And actually in Spain, they've had to reimpose some of the restrictions on COVID, just like they had done previously last week in Portugal. So it's definitely something that we need to keep our eye on as the Delta variant starts to spread, because it is very highly infectious. The ECB, also known as the European Commission Bank, also decided last week that they would set a very strict target of 2% inflation. What they've actually said is previously, before, it was near or close to 2% inflation. What they have said now, by Christine Lagarde, who's the head of the ECB bank, is that anything either below or above that is seen as a failure, and they need to try and get it as close to 2% as possible, which is quite a bold call from the Euro ECB, considering that they think that they can completely manipulate that level of degree. We will see how that plans out. We also saw in the UK that there was a slowing in the economic data as well. So it was actually said that there was a slowing between April to May in the economy, and that there was good levels of growth in the hospitality and leisure sector, but that was offset by some struggles that we've been having in the UK in terms of construction and retail and some other areas which are lagging. So moving over to China now, this week was really focused on some of the regulations that the Chinese government had set in place in regard to internet-based companies. So we all know over the last 6 to 7 months there's been a big clampdown on Chinese large internet companies, and that really all started with Alibaba. And a few months ago they received a very large fine, I think it was 2.2 billion, for anti-competition practices. And throughout that time they've also had meetings with many of the large internet-based companies in China, and they've actually started to roll out very much stricter regulations in regard to how they operate. And they've been giving lots of small fines out to different Chinese internet-based companies. But last week there was an incident in terms of a company called Didi, which is a Chinese company which IPO'd just last week. They actually raised a huge amount of money, especially from American investors. And it caused a little bit of a scandal this week because the Chinese government actually stopped Didi from being able to onboard new customers. And their app has been banned from the App Store, so they're not allowed to sign up new customers. Obviously, this had a catastrophic result, and it will do moving forward in terms of their growth if they cannot onboard new customers. However, it was a little bit scandalous because they had just raised all this money from American investors, and it had been seen as a kind of a cash grab, a way of raising a lot of money, knowing that the Chinese government was on their case. To me, from a personal point of view, I can't see a way that Didi did not know about what was potentially coming up, or at least a little bit about what might actually happen to them over the next couple of weeks or couple of months moving forward. So, I feel like this was a bit unethical, and that this could cause a lot of damage to investors. So I expect there to be some increased scrutinization, not only from the US government, but also from the US as well. And there's going to be a much bigger focus on the way that Chinese companies are able to be listed in the US. Because in the past, there'd been a lot of incidents, not only incidents like this, but also other incidents regarding accounting practices, etc. So I expect there to be a lot more spotlight on it. However, what I can see also is a lot of opportunities in China, especially at some of these depressed valuations. So obviously there is a risk involved, but what I've done is I've actually increased my positions slightly in Alibaba and JD.com. I see these as probably two of the strongest internet-based companies in China with massive growth potential. I also think that Alibaba, although it's not out of the woods with the Chinese government and in the way it's been scrutinized. It's also been given a large fine already and several small fines. And I think that they're going to be very willing to work with the Chinese government, and that, because they were one of the very first to be kind of reprimanded, that they're likely to, move out of this very well over time and understand how these new regulations and practices work. So overall, I'm very bullish on these Chinese companies, but it's going to be a slightly volatile next couple of months as we work out the way that these regulations are going to be properly put into place. It was also decided this week that the People's Bank of China had also decided to reduce the reserve requirement ratio requirements. And what this basically means is this is the amount of money that's required for them to keep in reserve in their bank. So what this does is this effectively releases liquidity back into the economy, which I think is going to be a good sign, because a lot of this money is going to be put to work elsewhere in the economy. As I move on now to the top 3 performing stocks of last week, they were actually quite similar to the stocks that were in there last week. So in number 1 was 𝗁𝗁𝗃𝗀𝗃 again. And 𝗁𝗁𝗃𝗃𝗃, as you know, if you've listened to my videos before, is one of my high conviction stocks. And what they do is they are a Sichuan hot pot restaurant, which have restaurants all over China, but also expanding internationally. And over the last couple of months, they had been suffering. And a lot of that had been to do with obviously the coronavirus period. But over the last month or two, there was also flare-ups in the Guangdong province of COVID. But as COVID vaccination rates increase and Chinese people feel more confident to visit restaurants, and business and families alike enjoy the customer experience, I can expect that a very strong brand like 𝗁𝗁𝗃𝗃𝗃 will actually increase over time. And again, they've done really well last week for 2 weeks in a row, and they actually rose over 9% last week, and I expect a lot more growth from this really great chain of restaurants. The second best performing stock in my portfolio was a company called 𝗳𝗶𝗃𝗃𝗃. And what they are is they're an automotive company which actually sells both new and second-hand cars. And they've actually done really well lately. And just a couple of days ago, they actually released the preliminary results, which says that there's a lot of growth ahead for 𝗳𝗶𝗃𝗃𝗃. And they actually done really well last quarter. And they're expecting to get back to pre-pandemic levels in the near future. And that did really well last week, growing over 8%. Third best performing stock in my portfolio last week was Coinbase. Coinbase, as we know, is one of the top crypto exchanges. And actually it does very well in times of volatility. And that can be whether the price is going up or the price is going down, because they make their money from commission fees. We all know that when Coinbase listed, rather than being an IPO, it was a direct listing. And what that means is that there was no new shares created, and that the shares that were available to shareholders had come from either past VCs who had invested in the company in the early stages, or from employees of Coinbase. And I think what we saw was a big rush for many people that had been invested in Coinbase for a long time and wanted to make an exit. And I think what happened is there was a lot of, and the crypto market was very good at the time as well, so it attracted lots of people to buy this stock. And there was some selling pressure, and obviously the price of Coinbase has gone down since. However, I think what's happened over the last couple of weeks is we've hit a fairly good floor for Coinbase in terms of the stock price, when it was kind of 220, 230 level. And I think now we're going to start to see growth. It would obviously be really helped as well if the crypto market in terms of prices bounces back as well. This will have a lot of retail interest and would increase the revenue and user numbers moving forward. But I'm overall very positive still about Coinbase, and I expect it to have a great second half of 2021. So let's talk crypto, people. So what's been happening in the crypto markets this week? Well, again, actually, it's been pretty uneventful, and crypto markets have been very flat. Actually started off the week at about $35,000 a Bitcoin, and then we had a dip kind of midweek, and on Thursday, which it went down to about $32,000, and since then we've seen a slight increase there to around 34,000 at the time of this video. I think what's been happening in Bitcoin is that we've been stuck in this range between 30,000 and 40,000. The encouraging thing is that no matter what media is actually thrown at Bitcoin, or what happens in terms of announcements such as the Chinese government, Bitcoin is holding that 30,000 floor really well, and it's showing really great resilience. And if we look at the mining situation again, which obviously happened in China, which I've spoken about before, where Chinese miners have been forced to stop mining Bitcoin in the country, and these are being distributed around the world to other countries. What we saw a big drop off in the hash rate, which I spoke about last week. And what we're starting to see now is we're starting to see a very slow increase again in the hash rate, as some of those miners have started to reposition themselves into other countries. It's a kind of a slow and steady situation though, because it does take a lot of time for that amount of hash rate to go back. But however, the difficulty adjustments have been adjusted last week. As I mentioned, it was the highest difficulty adjustment change in the history of Bitcoin. Yeah, I expect those hash rate numbers to increase over time. We've also seen a continued increase, and I've been saying this for weeks and weeks, but what's actually been happening is that a lot of the speculators have come out of the market. There was the initial fear and panic when the price went down. A lot of people sold then, and then there was some boredom in between as we ranged between 30 to 40,000. And this has allowed a really great opportunity for long-term holders of Bitcoin to accumulate as much as possible. And a lot of this Bitcoin now is with, more hands with more convictions, stronger hand participants, which I think will be very good for holding that floor. And when the time is right for us to start increasing the price of Bitcoin. So some really interesting news this week in terms of Bitcoin is that I just heard yesterday that Paraguay are introducing a bill early next week to also potentially make Bitcoin legal tender in the country. So this had previously happened about a month or so ago in El Salvador, and now we're starting to see a lot of interest from South American countries, and there's a lot of concern around the way that the US dollar is used as a powerful weapon against the South American states. So I can expect to see this more and more, and as more and more South American companies get on board, it's likely to act as a benchmark, and more should follow soon. The other interesting thing to keep an eye on this week is also the Grayscale Trust. And the Grayscale Trust, as I've posted this week in an analysis post, is basically a way for institutions or long-term investors to be able to have Bitcoin exposure, but without having to custody the asset. Yeah, so this is effectively a product which allows them to be able to hold, and what they can do is they can put this in traditional IRAs, which is done in the US, and they have tax benefits as well on this. What happens is when you invest in the Grayscale Trust is that it's subject to a 6-month lockup. So what you are is you're actually buying shares at a specific Bitcoin price. And when you buy those shares, they're locked up for 6 months, and you're not allowed to get rid of them for 6 months. So you have these periods of time where a lot of people are investing in the Grayscale Trust, and we had a lot of investments in January as the price of Bitcoin started to rise. Some of these Grayscale Trust shares are now starting to be unlocked in July, and we're going to see quite a large unlocking around the 18th of July. So the way that institutional investors actually play this market is that they will buy GBTC and then to offset some of that risk of the premium, they will actually short BTC. And then after the 6 months lockup period, they have the right to then sell that GBTC. And then they start to unwind those short positions. Depending on what way you look at it, there could be some bull cases and some bear cases surrounding this GBTC unlocking. So obviously the bear case is that a lot of people are going to be selling their GBTC shares as the 6 months unlocking expires. And this might cause some downward pressure on the price. However, another way to look at it is because of these hedges or these shorts of Bitcoin, which have actually put in place to protect them from the premium of the Grayscale Trust, this could actually reduce the short interest in Bitcoin and actually take some of the shorting pressure of Bitcoin. And this could be good for the price. Overall, I think that this is going to be a net neutral event. There's going to be some volatility over the next couple of weeks, like there has been throughout. But I think overall, if we're looking at Bitcoin as a whole, I think that the sellers are starting to get exhausted now, and they're starting to get moved over to stronger hands who are more willing to hold for the long term. I think that although July may still be a little bit volatile, I think that from August onwards, we're going to start to see an increase again in the price of Bitcoin as we have more and more willing buyers and less sellers in the market. Overall, our portfolio is still doing really well for the year, and actually we're sitting at about 105% up for the year, which is really an astounding result. However, I do know that over the last couple of months we have seen a couple of red months in my portfolio, but I think I've managed those as well as I possibly can to ensure that I protect ourselves from the downside, which we overall have. However, I do realize that some of you may have copied over the last couple of months and may be slightly down on your copies. However, what I want to say to you is try and consider the overall picture of what's happening in our portfolio for the year, and have conviction in not only myself but also in the assets in my portfolio and the way that I manage the portfolio. I think we are very well primed to see good growth in the second half of 2021, and I really thank you all for being on board. As usual, if you have any questions, I'm always an approachable investor and I'm always happy to answer those questions for you. Until then, I have some really good things coming up this week, including a new Singapore investor forum video, which I'd like to share with you midway through this week. And until then, have a great week ahead. I'll speak to you all soon.